Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lien.
Hello. Good morning, everyone. This is Kathy. Let me know you're here. Let me know you can hear my voice by posting a, emoji. I like the chart emoji or a thumbs up emoji. Let me know that you're here this morning and everything is coming through loud and clear. Let me see in the chat. Good morning, Cheryl. Good morning, Stephen. We have some BK members in the room right at the open. I'm so glad to see that all of you are telling me everything is working out great. Now, I want to start, I want to make this an interactive session. I don't just want to talk to you. So, tell me a little bit about whether, you use fundamentals as part of your trading. If you do, give me a thumbs up or, give me a little bit more information. How do you use fundamentals as part of your trading? Because we all know that, fundamentals, or I hope you know that fundamentals affect how currencies move on a short-term and longer-term basis. So if you use fundamentals, give me a thumbs up. Let me know that, you use fundamentals as a part of your trade. Give me a thumbs down. It's okay. There's no wrong answer. If fundamentals, if you're just curious about fundamentals, but you really don't know how to use it, give me a thumbs down. It doesn't mean that you don't like fundamentals. It's just you telling me that you want to learn more about it and how to use it as part of your trade. And that's perfectly fine. But it sounds like most of you do use fundamentals as part of your trading, and it's perfectly okay to be still learning how to use them, because that's what I'm here for. I'm here to, tell you a little bit more about, first of all, what's going on in the markets, what I think is happening, but also to tell you a little bit about how important fundamentals is and how you can incorporate it into your overall trading. And, we have the great opportunity to do so today, because we don't have a week where we're littered with such high volatility events that, we really have to drill into each piece of economic data. Instead, today we can take a seat back. We can talk more about the overall market trends and how to use fundamentals to get a sense of all that. And I think, that's important to talk about, especially in an environment where the trend is so strong. And I love to see that, more than 80% of you are using fundamentals. I do have one more question, just so I know. I'd love to get a sense of who I'm talking to. Do you consider yourself more of a day trader or swing trader? And there's going to be a lot of questions today, because we're going to try to make this as interactive as possible. Do you consider yourself more of a day trader or swing trader, or both? Once again, there's no wrong answers, but I want to make sure that I answer as much of your questions as possible. And in doing so, it certainly helps me a lot by understanding whether you're a day trader or a swing trader. All right, so sounds like there's a lot of swing traders. There's a lot of day traders, both. And in many ways, I'm the same. I am both a day trader and a swing trader. Although, for weeks, like this, we may be we may actually have some smoother trends than weeks where we have a lot of big events. I think a halo, just like you said, I'm more of a swing trader with day trading tendencies as well. But, for me, my goals are slightly different, which is that, I have a very specific goal of making 100 pips a week. And, that goal of making 100 pips a week helps me keep consistent. It also gives me a target. It also, affects the way I trade because I start every week with a clean slate. And I always start the week, with a focus on making 100 pips. So, usually I'm a little bit more aggressive in the beginning week. And when I've already made 100 pips, I tend to be more conservative. So, because we try to produce good trade ideas for BK Trader members, having 100 pip a week focus allows me to accumulate those profits gradually and slowly, but all with a swing trading bias. So that is very, very important. So we've got a question here from Chucks on how do you understand fundamentals? There's a lot to talk about when it comes to fundamentals, but I think the first step to understanding fundamentals is understanding you only really need to understand one thing when you trade fundamentals. Well, yeah, okay, maybe that's a little bit, I'm kind of downplaying a bit. If there is only one thing you're able to start with to understand fundamentals, I think that it should be understanding the relationship between US Treasury yields and the dollar. All right, let me know right now if you understand the relationship between US Treasuries yields and the dollar. Yes, for you do, no, for you don't. Because we are going to talk about that. That is probably hands down the most important relationship to know. And it's the first thing that I look at every single day. Good. I love the no's because the no's mean I have an opportunity to explain to you. The yes means you'll have to be patient and listen through this, but I think it's still beneficial. So when I start my trading day, I always start by looking at what's going on in the markets. And even if it's today and I'm looking at what's going on, for the week, I always start by looking at, first I always get a sense. Hold on, let me mute this chat that's coming through. Okay, I always start my day by looking at, the bigger picture, what's going on. And the bigger picture starts with data, which we'll look at in a later, but I've already looked at what the data is. Then I'll look at, what are stocks doing? What are stock futures doing? Are stock futures up? Are stock futures down? And you can see today, look in the upper right-hand corner, that stock futures for the Dow futures are down. So there's a little bit of a pullback in the markets. Now, I wouldn't call it full-fledged risk aversion. It's certainly not full-fledged risk aversion, because if it was full-fledged risk aversion, we would be down, sorry, just lift the chair up. We would be down like 100 points this morning or more, 200 points in the futures, but we're not. Futures are only down 60 points. So, we have a little bit of a pullback, and, stocks are certainly peaked last week and are pulling back. But it's not a big move. The next thing I'll look at is what are oil prices doing, just to see, if there's any big moves. And oil prices are up a little bit, not significantly. Then I'll look at what are Treasury yields doing. And you will see Treasury yields, US Treasury yields, 10-year yields is at 4.47%. It is up today. It is consolidating near the highs. Would you please show how to chart the difference in yields in TradingView? All you do is you just click on the little box, and you can click on US 10-year if you want US 2-year. Whoops. It's O2Y. Oops. Look at me. Can't spell this morning, or my mouse clicker is not working. See it, 2-year, 10-year. Or you can just kind of search by a number. I like to look at the 10-year yield. So 10-year yields are up. And this has been one of the really big stories of the market, which is that yields have been very, very strong. If we even look at a monthly chart, you will see, this is an old thing. You can see that we are pretty much hovering at the highest level since June. I guess you see it better on the weekly chart. This is kind of interesting. Let's take a look at this. This suggests to us that maybe we have a roughly drawn upper trend line, and we did break above the trend line, which is good. We broke above the trend line in 10-year yields, which would be great. And for those of you that love breakout retests, if we broke out and then we tested the line and then we held it, that would be very, very positive for US 10-year yields. But there's also the other scenario, right? What if that doesn't happen? What if it breaks to the downside? And, if it breaks to the downside, there's two ways to watch this. Either you go for a straight break to the downside, or it breaks to the downside and it retraces back to the trend line, finds resistance there. Let's get rid of some of these things so we know what I'm talking about. So we draw back our trend line, pretty much right around here. So if yields, right now, yields are up. And so if yields come back below the trend line, which it looks like maybe it could, maybe it could not, we'll see. It comes back below the trend line, tests the trend line again, fails to break it, then wow, we could have a very, very big move lower. And that would be a problem. Why is it a problem? One of the questions that I asked you is, do you know the relationship between treasury yields and the dollar? Well, we've got treasury yields up here. Now we're going to pop on dollar yen. And what I'm going to do is I'm going to move this to the left-hand side of my screen. And I'm just going to make these regular so you see the price. And let's just make the line blue so it's visible in a better way. Perfect. Look at this. What do you see? What do you see going all the way to the beginning of the year? Do you see a positive or negative correlation? Give me your answer in the chat box. We're going to get a lot more interactive these days. Give me your answer in the chat box. Do you see a positive or negative relationship? I could ask this a different way. If you see this chart and you see that US yields are up, do you think that dollar yen should go up or down? So I got a positive, I've got a negative, I've got mostly positive. Yes, there's a positive relationship between, and yes, there will be periods, David Durance, where the relationship breaks down a little bit. But what does this tell us? It tells us that it always comes back. I mean, we even see this if we keep on zooming out. Let's go to a weekly chart. Look at that. Look at that weekly chart. Positive relationship. So if there's only one thing that you are to learn about fundamentals or to follow in fundamentals, and the number one thing I look at every single morning when I start my day or what I'm watching constantly while I trade is US Treasury yields. And now here's the test. If US Treasury yields are up today, US Treasury yields are up 0.5%, should you be looking to buy dollars or sell dollars today? Now, this is the test. Don't be afraid. I think that even if you get the answer wrong, that just tells me I should be explaining it better. So if you wake up in the morning, I start my trading day at 6:30 a.m. and you see US 10-year Treasury yields up 0.5%, should you be looking to buy dollars or sell dollars based upon this relationship I've explained to you? Yes, 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 yes. Buy, 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 buy. All of you are getting it right. It's not so much, yes, the trend is your friend, but the yields are your friend. That is what I'm trying to tell you. The yield is your friend. The yield is the best friend that you can have when you're trading forex. It's the best friend that you can have. Even if you don't see in your technical strategy an opportunity to buy dollars, the fact that US yields are up tells you that you should not take the sell dollar trade, or you should think twice about it, or maybe you should take a smaller position. Regardless, the yields tell you, and let's look at this on a 1 year basis. Sorry, 1 hour basis. So I showed you the daily chart. I showed you the weekly chart. Look at the 1 hour chart. It's never going to be a perfect mirror image, but this is pretty darn close, I think. And it tells you, it confirms to you that if there's only one thing that you follow in fundamentals, it should be yields. And yields have so much built into it. I mean, there's sentiment, there's what the market thinks the Federal Reserve is going to do. There's so much, but it's also for all of you that are still struggling to understand fundamentals. It's a very concrete way to know where fundamentals are at on a day trading basis as well as a swing trading basis. So hopefully that explains to you a little bit of what I'm talking about. So we got a good question here, which is so when price goes up from bond purchases, shouldn't yields go down? Yes. When bond prices go up, yields should go down. But right now we're plotting the yields. Right now, the numbers on the left-hand side of my chart is just the dollar-yen price. The numbers on the right-hand side of the chart are the yields. So when yields go up, the dollar should go up. Now, of course, nothing works 100% of the time. But it does work most of the time. And you don't even need to believe me. I have shown you in the charts themselves that you can see this for yourself. Now, I got a question here. I usually use, Bloomberg for this. So I haven't done this in a while. Let's see. I don't know if TradingView actually lets you do this. I don't think it does, as far as I know. Yeah, it's not letting me do this. What I'm being asked here is whether we can chart the spread. Well, actually, no, we can. Minus GE German 10-year yield. Look at that. Okay, we good to go? Is this going to give me what it wants? I'm going to have to play around with this. And it does, TradingView does allow you to chart spreads. But let's talk about this next week. I haven't used it on TradingView. I'm so used to using it on my Bloomberg terminal. But we will talk about this next week once I have figured it out. But that's how you would do it, lackadaisical trader. It does allow you to chart the different spreads. I'll figure it out. I'll show you next Monday. Join me then. All right. All right. I need to press enter. Okay, let's do this. Let's see if we can do this. Okay. Dollar yen. Actually, no, we're going to do euro dollar because we are in looking at. So we would do the German 10-year yield. So this. Oh, crap. Hold on. We're going to do this one more time. German. Oh, here we go. So we're going to click on this. What did I just do earlier that I got it?
Okay, I think you have to press the symbol, then minus, then the other symbol, then press enter.
It's not, if I click the symbol, the indicator comes up. The symbol comes up. So it's not doing that. But okay. Why don't we do this? 10-year minus US 10-year. And then hit enter. Ooh, look at that. Thank you so much. Who's my best friend today? Who's the one that told me that? Edward. Thank you, Edward. Thank you, Edward. Yes, there you go, Edward. Edward's my best friend. He's our superstar today. All right. Okay, let's get these things on the same right click, pin to the left, and regular. Okay. All right. Perfect. But now we're in dollar yen, which is not what we want. This is euro dollar. Perfect. Edward is our superstar today. Let's give him some claps for helping us out, figure this out. All right, look at this. Thank you so much, Edward. Edward showed us how to do this in real time. That's why I love all of you guys. And you can see, once again, the candlesticks is euro dollar, and the line is the spread between German and US 10-year yields. Look at this. What do you guys see? Come on, we got to have some claps for Edward. Thank you. Yes, fist bump, claps. Thank you so much, Edward, and everyone else who tried to help us muddle through this. But the point is that we get to see together what this relationship is. I showed you dollar yen myself because it was the easy one. Euro dollar, we just did the spread between 10-year and US, German and US 10-year yields. And what do you see? Positive or negative correlation? Positive correlation. So let me ask you a question. If the spread is pointing up today, like it is, look at the spread on the bottom here. I wish I could, you see this, pointing up. Should you, yes, Edward is our superstar today. Should you be looking to buy or sell euros? What do you think? Should you be looking to buy or sell euros? Come on, my friends. That's the test. If you see the spread up, buy euros, says David. Couple more answers before I say whether you are right or wrong. Buy. Come on, I want to see 3 more answers. Perfect. Okay, some of you say sell, some of you say buy. I think there's a little bit of confusion, and so I'm going to explain it. So the answer is buy. And maybe the reason why some of you said sell is because US yields on the upper right-hand corner is up, right? But the US yields being up is most important for dollar yen because Japanese yields are pretty much zero. So the dollar yen only moves in lockstep with the 10-year yield spread. For a pair like euro dollar, the German 10-year yield spread is more important. But I don't think that it needs to be that complicated. Quite honestly, I feel that even though the yield spread, the German minus US 10-year yield spread is pointing up today to this blue line, I still will not be looking to buy euros. And the reason for that is because the US yield factor is much more important than anything else. And this is where confirmation is so important. If I have this yield spread pointing down and I have US 10-year yields up, then that's a very, very strong signal for me to sell euros. But today, they're kind of different. One, the US 10-year yield spread is up, and the this little line here, the German 10-year yield spread is up as well. So they are not confirming. They're conflicting. So when they're conflicting, the best thing is to not take a trade. But this is how, you can turn. This is how you can look for fundamentals in a very tangible way. Because one of the challenges with fundamentals is that, it's really hard to figure out what the bias is, what your bias is, what your bias should be. Boris, can you get rid of Edward's comment on the main screen, please? Boris, if you can just delete Edward's comment. So one of the greatest challenges with fundamentals is that it's hard. How do I know dollars should be bullish? How do I know euros should be bearish? Whereas these yields and these yield spreads are really tangible ways to figure it out. I mean, there's no guessing, is data going to be strong? Is it weak? Is, markets bullish, bearish, euros? That's kind of hard. And that's what you come to me for on Mondays. But on a day-to-day basis, it is much more valuable, in my opinion, to just watch the yields. And in my opinion, it's much easier for you. And if you want to distill fundamentals to one thing or two things, it should be what's market sentiment measured in whether stocks are up or down And then is the market pro-dollar or anti-dollar, measured in the US Treasury yield? And you can see today, the market is, I don't want to say it's risk off, because 45 points in the Dow is nothing. It's probably risk neutral. And the dollar bias is slightly positive. And so that is the most important information. That's the main information I think that you need to know when you start your day. So let's talk about what's going on this week. The US dollar is obviously very, very strong. And I posted a really great video that I'll add in later on talking about that, and talking about how, and I'll put it into the chat box right now if you just give me a minute. I really encourage you to watch the video that I published over the weekend on the dollar rally, whether it's an epic bull run or in the danger zone. So this is a good video, kind of talking about what's going on in the dollar, why it's so strong, and how much further it can go. But in general, the dollar is bullish. Why is the dollar bullish? Data's been fantastic. Last week, we had the inflation report. It was good. We had the retail sales report, which wasn't terrible. I mean, some parts of it were ultimately pretty good. And we have the Federal Reserve kind of worried about inflation. We have the Trump effect. So we have U.S. Treasury yields pointing up towards its multi-month highs. So for all of those reasons, the market is dollar bullish. And this week, we don't have too much going on. We only have a couple of housing market indicators, which really aren't that important these days. They will probably be a little stronger because U.S. interest rates the previous month was lower. And we have the Philly Fed index. The Philly Fed index is probably going to be stronger because we had a huge rise in the Empire State Survey. We also have the S&P PMIs, which are less important than ISMs. But bottom line is we have had some really good U.S. data. And we had some really, really good U.S. data. And this week's economic reports are not really going to threaten that. I do want to show you one thing. Which is this. And this is kind of, we look at this often. So for those of you that's joining me for the very first time, this is the CME Fed Fund Futures. And basically, this is what the market has, quote unquote, priced in for the next central bank meeting. So right now, the current interest rate is 4.5 to 4.75%. And, the market is pricing in, if you look at the lower right, of almost 42% chance of a pause by the Fed in December. Think about that. The Fed cut interest rates twice, and then now they're looking for a pause in the cycle. And this is down a lot from the beginning of the month. From the beginning of the month, the market was pricing, or 1 month ago, the market was pricing in, if you look at down here, a 77% chance of a 77% chance of a interest rate cut by the Federal Reserve. And now that's dropped to 58% chance. And if we get more positive US data, this meeting's on December 18th, we'll still get one more jobs report. If we get that huge snapback that everyone anticipates, because last month's numbers were distorted by the hurricanes and the strikes. If we get a snapback, this could go to this 40%, 42%, could maybe go to 60%. And that is one of the main reasons why the dollar is so strong. Because the Federal Reserve, the market is now getting comfortable, or, starting to believe that the Fed may not cut interest rates in December, which would be very, very positive for the dollar and negative for stocks, because we want that Santa Claus rally, right? We're definitely not going to get a Santa Claus rally if the Federal Reserve pauses. I got a question from somewhere in Rockies. How do you utilize Fibonacci's? I love Fibonacci's. I think Fibonacci's are very, very important. And when we look at technicals, we always look at Fibonacci's for resistance and more support these days, which is if we pull back, it is something that, I think is very, very important. Randy, how come my heat map is different from my Telegram text? This is the latest one. I don't think it should be different. Maybe you have an older Telegram text, and the Telegram text is just for our BK members. Rudy asks, do bank traders use what is known as the SMS? I don't know why that disappeared, but SMC strategy after they stop working in the banks. They use SMC for certain asset class, certain trades. But when they stop working with the banks, they don't necessarily have the same access to information. So anyway, my point is that we are, the market is still bullish dollars, but we have a very big problem. What's the problem? The problem is that the dollar is grossly overbought. I mean, this is a daily chart. Dollar yen, straight vertical line. Not vertical line, but straight line upwards pretty much. And it's getting very, very, overextended. And you see it in the dollar index as well. I mean, the dollar index is even more dramatic. I'm going to a monthly chart. Actually, we don't see as much as monthly, but I'm going to a weekly chart. Dollar index rose to its highest level since 2023. Talking about fibs, where could it stop? Look at that, my friends. Fibs. I love fibs. And you can see that the fib is 50% fib of this move is right at pretty much where the rally stopped last week, which, no coincidence, coincides with these highs here. It's important for a reason. So it is very, very important, in my opinion. And, if we go back and we drill back down to the daily charts, you will see that we're starting to pull back. Now, we didn't quite touch the 50 SMA. And if we bring back in my moving averages, this is let's get rid of some of the other ones so it doesn't distract you. I like to look at the 5 SMA a lot. It's a moving average that a lot of institutional traders look at. This is the dollar index that we're looking at. So right now, we're still in the uptrend because even though we paused right at the 50 SMA and Fibonacci's matter, we have not closed below the 5 SMA. And even if we kind of ignore the 5 SMA, this is the level. This low here, 106.30, which is not that far. Right now, the dollar index is at 106.57. If the dollar index drops below 106.30, then we will probably have a much more dramatic correction down to the next fib level. So this is the level to watch. Now, we don't necessarily trade. The dollar index. We focus more on dollar yen, for example. But the dollar index is an important cue. Now, with dollar yen, this is a big candle. The candle on Friday, we made a new high. It broke below it, closed near the lows. We are now below. It has yet to close back above the 5 SMA. Let's get rid of some of these lines that you don't need to worry about. And so what needs to happen now? Right now, I would have to say that the bias is a little negative for dollar yen. And I also want to point out, look at US 10-year yields. They're actually gone back to flat. They're flat right now after being up 0.4%. So explains why euro dollar is at its highs right now. Anyway, this tells me that, dollar yen could see a deeper correction down to 154 minimally. which is today's low, but that's not too far from here. It's not really well, I mean, it's still 88 points. That's a pretty good big move. But the more important level that I'm watching is going to be this former breakout point here, 153. So I do think that because we have not much going on this week, there's a good possibility we could get a pullback in the dollar. I'm still ultimately bullish dollars, which is what you see here. On a fundamental basis, there's no reason to change your view and turn bearish dollars. But because there's not much on the calendar this week, and when there's not much on the calendar, it gives you scope to take for some other trades. It is a possibility of some profit taking. And that's what I want to talk about. Now, in terms of the euro, I'm bearish euros in general, fundamentally. The ECB is actually the market, as you saw with the Fed fund futures, the market is kind of 50-50 on whether the Fed is going to cut interest rates next month. They're also about 50-50, probably like 30-70, with 70 no rate cut by the Bank of England at their next meeting. RBA obviously not going to cut interest rates. So whereas the market is almost certain that the ECB is going to cut interest rates. So the market is almost certain that the ECB is going to cut interest rates. And data from the Eurozone has been really bad. Like the German ZEW survey was weak. Eurozone industrial production numbers were weaker than expected. The most important event risks on this week's calendar are the PMIs. Eurozone PMIs, UK PMIs, Australian PMIs, US S&P PMIs, all of that is the main focus this week. And the Eurozone PMIs are expected to be softer. They're expected to come in lower. And that could lead to a further drop in the euro on a fundamental basis. So one of you earlier said, I'm going to find this this chat. Let me see if I can find this. We were looking earlier at German 10-year US Treasury yields. I don't know if I can find this, but earlier one of you accurately said that the outlook for the euro is bearish, and it is bearish because data's been bad. They're the only major central bank looking to cut interest rates at their next meeting, and the market feels pretty confident about this. But and I think the Eurozone PMIs are going to be weak. But you can see that, the euro is looks like it wants to form a bottom, right? I think it's a little too early to tell. What I'm going to do is, right now the downtrend is still intact in euro dollar. We got to be careful because we're, gotten very overextended and it's retracing. But I'm going to be watching my zip charts. This is my zip chart. And I don't trade, Mondays we get a lot of, it's very important to know when to trade and when not to trade. And Mondays we get a lot of false signals, which is why we didn't take any of these trades here. But tonight is when trading gets really kicked up. Right now, the background, this is the zip chart. The background is red, which means the longer term trend is bearish. We're trading above the indicator line, which means that the shorter term trend is bullish. So I'm going to be looking for one of two things. I'm going to either be looking for Eurodollar to drop back below the indicator line, give me a white candle to signal a sell, or I'm going to wait for the background to turn green, indicating that the positive and negative, the short and long-term trend is positive. But right now, we're kind of in no man's land. So I don't really see a clear trading opportunity for euro, but I'm still on a fundamental basis biased to the downside. So this is, Friday, last week, we took this really beautiful Eurodollar trade. We also took this beautiful Eurodollar short trade here, which is the white candle, if that's what you're looking for. Okay, British pound. I'm neutral British pound. This is actually an important week for the British pound. We have UK inflation data. We have UK PMIs, both of which are very, very important. And the market right now does not expect the Bank of England to cut interest rates at their next meeting. But the inflation data and the retail sales data and the PMIs are going to play a very big role in their decision. Somewhere in Rockies asked if my zip chart is a 4-hour chart. The zip chart is a 1 hour chart. Let me know if you want to learn more about zip. You can put a thumbs up emoji. Maybe I'll explain a little bit more after we go through the fundamental outlook. If you're happy with just moving forward, just give me a happy face. So happy face for moving forward, thumbs up if you want to learn more, if you want me to talk more about zip later. So the market is neutral. I'm neutral pounds because there's a very interesting development in pounds. On the one hand, data hasn't been that great. On the second hand, they announced a huge budget. So this budget is expected to give a lot of stimulus to the economy. And so this stimulus is expected to drive up growth, expected to drive up inflation. So, for all of those reasons, it's a bit of a tough call with pounds. I don't think it's clear whether or not we're going to get a rally or not. So I'm completely neutral pounds right now. And, that's basically, what we're looking forward to. For all of you that are on X, if you want to interact, come on to the YouTube live stream, because you're not able to give me my emojis or ask me questions if you're not on the YouTube live stream. So Aussie and Kiwi are two of the worst performing currencies this morning. Aussie, RBA has the meeting minutes being released today. We know, maybe you don't, but I'm telling you that the RBA is the least dovish central bank. They're the only ones that have said all year that they're not going to cut interest rates. And they're still in the same position, not going to cut interest rates. But data's been kind of weak. Last week we had the jobs report. It was terrible. Recently we had the inflation report. It wasn't great. China has been doing all of these little stimulus packages that are not enough. And so the RBA, we're getting the minutes tonight, probably going to reaffirm that they're not in any position to cut interest rates, but the market is starting to shift its thinking on Australia, because they think maybe the PMIs could be a little weaker this week because China's slowing, thinking that the RBA may have to cut interest rates next year and start to shift their posture. But we'll be listening in to the RBA minutes this week, and but the PMIs I think are the most important. Canada, this is also a interesting week for Canada. We've got Canada inflation data and Canada retail sales data. The Bank of Canada is expected, they have been one of the most aggressive central banks. They are one of the first central banks to cut interest rates. Stephen, what country are you in? Where are your grocery prices through the roof? Are you in the US? Are you in Australia? Are you in the UK? Let us know so we can get a sense of, whether, where you're telling us this from. Okay. Anyway, Canada has inflation. They've been the most aggressive central bank in cutting interest rates, and they are expected to do more. They're expected to cut interest rates further. And, but data suggests otherwise. The inflation data, the price component of IVPMI increased in the last month. And the jobs report was really good. So there's a very good chance that dollar CAD, which is extremely overbought. Sorry. This is the one I think is due for a deeper correction. This is the one I really want to sell. I am not going to be selling it because the background is green and we're above the indicator line, but we're getting close. We could be dropping below this line, my indicator line, very soon. And if we do, then my bias of bullish CAD and also the technicals will start to get aligned. The worst performing currency today is New Zealand. Oh, yes. So Boris and I were both recently in Australia, and you're absolutely right. The prices were, definitely expensive. For us, it was a little easier because obviously the exchange rate, since we have US dollars, the exchange rate was wonderful for us. And so it didn't feel that expensive, but I can see that the prices are up quite a bit. And you're not alone. I mean, even here at home for myself in the US, prices have just consistently increased. They have not decreased. And this is one of the main problems. I mean, this is why One of the main reasons why Trump got reelected or elected, because prices are so high. Americans are feeling it. They're seeing it. And one of, I don't know if you have it in your country, but in the US, and especially in New York, maybe this is not true of other states. Now we have a cash price and a credit card price. And, the credit card price is more expensive. The cash price is now their regular price. So, a lot of these companies are embedding the inflation costs through other prices, through having a cash price, credit card price. It's actually become the norm here in New York. So prices are even higher than that. And so we are all feeling it. And prices, they never want to bring prices down, right? Somewhere in the Rockies says prices, when they go up, they never come down. It's kind of like, when your insurance rates go up, they never want to drop it. Because once they know that you can feel comfortable with it, they are not, they don't want to drop it, because they realize that you will pay for it. And that is the pain that everyone has. And that is why, even though oil prices and gas prices are low, people feel like inflation is too high because they're feeling it elsewhere. But we can all, complain and find camaraderie in prices being too high. But that is the world we live in right now. Okay, but what does that mean? That means that these central banks, will be still reluctant to cut interest rates too aggressively, because as somewhere in the Rockies says, prices are not coming down quickly or easily. The New Zealand dollar. I am bearish New Zealand dollars. I am bearish New Zealand dollars because the RBNZ, Reserve Bank of New Zealand, meets next week. And they are widely expected to cut interest rates. A rate cut seems to be in the cards for the Reserve Bank of New Zealand. And so Kiwi is the worst performing currency this morning. And it is also expected to continue to fall. We did have New Zealand PMIs released this morning. The service sector data was actually quite good. The inflation, the PPI report was actually quite good. But last week, the manufacturing data, which is more important for New Zealand, was kind of weaker. Overall, though, I think because they are the next central bank to have a meeting next week, I think Kiwi will remain under pressure. I remain bearish Swiss francs. I'm neutral bearish yen. Switzerland has a lot of weak economic data, inflation, retail sales, a lot of, just kind of softness in data. It trades more in the market's appetite for US dollars than it does based upon, what's going on in the country. Market doesn't really care all that much about what's going on in Switzerland, but I'm still bearish Swiss francs. I think it's going to underperform. Yen, I'm neutral. I'm mostly bearish because first off, data in Japan hasn't been that great. There, in the beginning of the year, we all thought this was the year for Japan. We all thought that Japan was going to have a fantastic recovery. Did that happen? Not really. They had it was a huge year for Japanese tourism. I traveled to Japan with my family and we had a great time. And I'm so proud of myself. I went to Japan. Let's remove all this. I went to Japan in the summer, right here, right when dollar yen was at 160. Now, of course, this is, I did not predict that this was going to be the top in dollar yen. It was just good timing on my part. But I was in Japan right when we had, where's my little circle? I don't even know. But basically, I was in Japan right at this period here. And it was fantastic. But since then, what's happened? Look, the yen skyrocketed, found dollar yen found a bottom right after the summer holidays, is only falling now. So one of the main problems and the reason why the Japanese yen is lower across the board this morning is because the Japanese economy, even though we had a huge tourist boom in the summer, is not performing well enough for the Bank of Japan to follow up with another interest rate hike. One of the main reasons why the yen had, rallied early in the year was because of expectations and then the reality of an interest rate hike by the Bank of Japan. But, even though the Japanese yen is weak, it is so weak, which should allow the Japanese government to raise interest rates, maybe turn this trend around. They don't want to do it. They don't want to do it because, first off, a weak yen is what for the currency? Tell me. All right. I want to make sure that you guys are still paying attention. A weak yen is good for the economy or bad for the economy? Do you think a weak yen is good for Japan's economy or bad for Japan's economy? Let me know. Type good or bad in the questions box. I want to see some responses here. I know it's, good. Okay. Some say good, some say bad, right? And it is a double-edged sword. It is good for exports, like my dear friend James here says. I don't know why I'm unable to share his thing, but like James says, it is good for exports. And it's fantastic for exports because Japan is an export-dependent economy. And so Japan wants a weaker yen. They want the yen to weaken, especially when inflation is low and growth is subpar. But it is also bad, as my friend Steven says. And it's bad because it makes their debt service costs more expensive. But a lot of countries don't really care about the debt service cost as much. It makes imports more expensive, as Steven says. It also makes, any type of travel for the Japanese more painful. But because Japan is an export-dependent economy, it is more positive than negative. That is why they're not raising interest rates. And the expectation that they're not raising interest rates is why dollar yen has been doing so well. And also, they had a huge political crisis. And they're always, I think every 2 or 3 years, there's a political crisis in Japan. And they're the country with the most frequently new prime ministers. But anyway, they have what we call a minority government, which means that there's no majority. And so nothing will be done in a meaningful way if there's a minority government. And that is why the yen is down across the board. That's why no one has any faith in the Japanese government from a leadership standpoint, from just an everything standpoint, from a fiscal and monetary policy standpoint. They have no confidence in the Japanese government. Some good questions here. Does Trump wants a weaker dollar? Is that true or false? He says he wants a weaker dollar. Those are the words coming out of his mouth. That's the policy that he campaigned on. However, all of his actual policies that he wants to have, like the tariffs on China, the tariffs on autos, the tariffs, 10% blanket tariffs, the protectionism he favors, all of that is actually positive dollar, not negative dollar. America first is positive dollar, not negative dollar. What about the carry trade? The carry trade is, the carry trade has been working. And it's, you look at, not at that, but let's look at Euro yen is a little lower yield. Aussie yen's a higher yield. Carry trades are working. But one of the most important things to know about carry trades, and I'm going to type this in here, okay? There are 3 conditions that carry trades win. One is we have a low volatility environment, because when we have high volatility, investors are nervous. They're not going to buy stock. They're not going to buy carry trades. Stocks are going up, and central bank is raising interest rates. So there are 3 conditions that carry trades win. Low volatility, stocks are going up, central banks are raising interest rates. So, is this the world we live in right now? Let's look. I don't want to change my get rid of that, but let's look at VIX. All right, this is the measure of volatility. And let's go to the daily chart. Volatility is low. It popped up a little bit, but volatility is low. So we are in a low volatility environment, not an environment where the markets are in crisis mode. Are stocks going up? Sort of. I mean, stocks are strong, but stocks are also looking like maybe they could fall. Are central bank raising interest rates? No. They are cutting them less, but they're not raising interest rates. It also works when central banks are doing nothing, when there's no interest rate changes on the horizon. So because central banks are not raising interest rates and stocks are maybe going up, maybe not, maybe could correct some more. We have no idea. They're already at record highs. There's enough uncertainty there to say that carry trades are not the trades to be in. Carry is not what we're talking about. Carry is not, yes, you got some nice positive carry in dollar yen and Aussie yen, but there's not going to be a huge demand for carry trades unless investors feel confident, stocks are going up, and central banks are either not changing interest rates at all, or they're looking to raise interest rates. So hopefully that answers your question. All right. So anyway, let's talk about data. What's happening this week? All right. So this week we had New Zealand PMI services that came out stronger, PPI from New Zealand that was better. We had Euro trade balance, which was stronger. This was supporting. So when you start your day, you look at, what is stocks doing? What is data doing? Eurozone trade data was also very, very strong. And this is not important at all. We had a lot of Fed speak this week that I think that is important. But, I don't think there's going to be anything, really that significant there. So no major data today. Tonight, we have the RBA minutes. And that is something that I think, is quite important. I think that the RBA minutes is probably going to be neutral, confirming that they are not going to cut interest rates. But I think there could be a possibility that they actually are maybe a little bit more cautious. We'll have to see. But I think that they could be a little bit more cautious, which, is important. Tomorrow, we have the Swiss trade balance. Once again, more weak Swiss data expected. These are the final CPIs. I don't think there's going to be any revisions to that. The most important release on tomorrow's calendar is going to be the Canadian inflation data. Because the price component of IVPMI increased a lot, this is expected to be stronger. And if it is stronger, it's going to be positive for the Canadian dollar, which is going to be positive for, negative for dollar CAD. And then we have, nothing really going on. Japan's trade data, a little weak, more negative trade deficit. Wednesday, we have UK CPI, very, very important. So once again, stronger inflation data expected from the UK. So we could see some gains in sterling as a result of that. What else? We have BOJ Ueda speaking. That'll be interesting to see whether he talks about raising interest rates or not. On Thursday, we have the only pieces of really important, not really important, the only pieces of meaningful U.S. data, which is the Philly Fed Index. I think it's going to be stronger because the Empire State Survey just shot through the roof last week. We also have jobless claims. That's probably going to be a little bit more important. That could end up being a little weaker because claims have already been so good. Housing market data is expected to be okay. And then a bunch of Fed speak. Thursday evening, we have PMIs from Australia. That's expected to be a little weaker. This is the big day. Friday is the big day. We have Australian PMIs, Eurozone PMIs, German PMIs, UK PMIs, US PMIs. All of these are very, very important. And for the most part, I think that they're all going to be mostly weaker. And that could, put a little bit of a dampener on those currencies. And then Canada also has retail sales figures which should probably be stronger because the data has been so good on the jobs front for Canada. So I think that, that is also something that is important to pay attention to. All right, now let's take a look at some charts. Euro bouncing, has not closed above the 5 SMA. Let's see where our fibs are. So we got a fib right here at 106.17, 38.2%. Not a coincidence. That is where these lows are here. So that is the main resistance level for Eurodollar. I think it could get there. I think it could test it, and then we'll see what happens around there. That's a place where it can invite sellers. Pound dollar still remaining in an overall downtrend. I think pound has more likelihood of rallying than euro, just from a fundamental basis. But, for the most part, downtrend remains intact. And let's see if we have stopped at any significant fibs here. That fib is still quite far away from there. I mean, the fibs are still quite far away for pound dollar. So for the most part, that's still quite far away. Dollar Swiss. Ooh, look at dollar Swiss. It's beginning to move lower. It's beginning to sell off. I really like this setup. I really like when we have the 5-period SMA crossing below the 20-period SMA, which is the gold line. I really like seeing that formation. And when I see that, I think that it's a pretty strong signal that we could have a deeper correction. Support is at 88.46, not too far from here. But if we break below this, we can get all the way down to 88 cents. So definitely watch out for dollar Swiss. I am definitely more bearish dollar Swiss than, of course, dollar yen. Dollar yen, we talked about how the US dollar is overbought, and there could be, is prone for a pullback. But, there's a lot of support below current levels. 154 is a support. Dollar Swiss, if you're going to sell dollars, I think dollar Swiss definitely looks like a better trade than dollar yen. Aussie dollar on a daily chart looks like it's, forming a little bit of a bottom. We've got resistance up at 65 cents. I think we want to wait for, some clear signals before going long Aussie dollar. Kiwi, definitely more bearish than Aussie. You actually see that in Aussie Kiwi as well. I think Aussie Kiwi has some nice room to the upside as the market starts to think about Reserve Bank of New Zealand's interest rate cut next week. And then last but certainly not least, dollar CAD. Dollar CAD is one of my favorite currencies to sell. I am personally going to be waiting for the, where's dollar CAD? I'm going to be waiting for it to drop below the zip indicator line, to close below the zip indicator line before really considering a sell trade here. And then as for gold, Boris is going to talk a lot more about gold, but gold's got this is a very, very strong bullish candle. This is a very, very strong bullish candle for gold. Now, of course, there is support right here. And then there is also support right here. But I do think after such a strong bullish candle, I do think that we may see some more recovery in gold, especially since we don't have too much in the way of data from the US this week. Euro pound, one of you, are asking about euro pound. Euro pound is, bearish euros and bullish pounds, but clearly we are up. We're not going to fade this. We're going to wait for, if we're going to look for any opportunities in euro pound, I'm not going to be selling until we drop below the indicator line, and ideally when the background turns red. What happens if stock market bubble, a financial risk or default risk arise because the Fed is not going to cut interest rates sooner? And Trump is also supporting higher inflation. It could lead to, very good question, Satish. It could lead to a deeper pullback in stocks, or more significant, more durable pullback in stocks that could lead to a sell-off in all of the yen pairs, all of the major currencies. So that's a risk. But so far, we don't have that. We could have that, but we'll have to see. All right. Did you enjoy today's session? I know that some of you want to learn more about ZIP. Maybe I'll do a special session on it, later this month. But if you enjoyed today's session, give me some hearts. Give me some, red hearts, orange hearts, green hearts. Let me know that you enjoyed today's session and that you found it valuable. And we do this every single Monday. So please join us. And as I said, I have a great video published on the dollar rally. Is it an epic bull run or a dangerous bubble? So make sure that you watch that for more detail on this. And also make sure you comment and let me know that you like it. We also have a lot of really great brokers and prop firms that we work with. So check out the description. I'm going to be dropping in some links later on. You get some great discounts. Like, for example, Think Capital, I think, is doing a 20% discount this month. Apex is doing a 70% discount. So there's a lot of, really great offers right now happening with our partners, especially with Think Capital. If you are interested in getting a Think Capital account, you get 1 month free ZIP and gold with any $25,000 valuation count. There's also a 20% discount that they're offering. So I'm going to drop in our link. You have to use our link and then the code. And you'll get that. Actually, no, it's 30% discount. Wow. Look at that. I'm gonna publish this for you. So 30% discount off any Trading View challenge, but you've got to use our discount code. All right. Thank you for all the hearts, all the waves. I really, really appreciate it. Thank you so much. And I look forward to seeing you all in the markets. Boris is coming. Boris is coming online. Say hello, Boris.
Hello, guys. How are you? Okay, you know what? Oh, hang
Sound
on.
a little weird, Boris. Tell me, while we're waiting for Boris to come in and start live trading, how many are trading? Tell me what you trade: gold, forex, or indices. Tell us gold, forex, or indices, or both, or all. Let us know.
Yeah, I'll put up a poll. How's everybody doing? My sound is better now. Everybody's good.
Perfect. It's perfect.
Yeah. I was double producing, so that's why it was sounding. Let me see. So what do we want to ask him? We want to ask him, what are
gold,
you
forex,
trading?
or indices, or combo?
No, you know what? Screw combos. That's an easy answer. I want gold, forex, indices. Tell me what you're really doing. I've been trading gold all morning long, guys. I got to show you some really so much easy money in gold today. Hope you guys really like it. All right, do the poll. Let me.
Boris, what kind of emojis do you like? What should they use to tell you that they're into your trades, into your trading?
I like the fist bump, guys. I love the fist
That sounds good. Let's give Boris a fist bump and let's, say hello, Boris. Thank you so much for getting us geared up for live trading. Yeah, thank you, guys. Thank you so much. I mean, you guys are great. Thank you, Kathy, for a really marathon session today. She really went through a lot of stuff. I hope you guys really like this. We're going to try and do more of this kind of, really in-depth Monday dives. So you guys are really, really well prepared. In the meantime, I have been scalping like a maniac while she's been talking. You can see my gold chart over here. Yeah, I want to show you something really cool, guys. Check this out. I think you guys can see this. You see how much? Hopefully, you're going to get to see a bigger zoom. I finally figured out the zoom function in Chrome, so you guys can see, all of the trades that I've been making. Everybody's good. Let's relax. There's not a lot of price action in indices today, but gold has been a really, really great trade earlier on today. Let me put on my my Apex ticker because I'm trading the Apex account, the $250,000 account. I am at 254. Where am I? Let me tell you a second. 254, 240. So $4,000 last week. That is slow and steady
target to go to the 15,000 funding. Very, very little drawdowns. I mean, as a matter of fact, let me see if I can pull up the. I'm gonna do reporting for last week just because I'm curious, and I'll give you. Yeah, let's do that. Let's just kind of look at this for a sec before we kind of get into. All right, so it's 3,000 last week. I guess the 1,000 came in. Well, let's see if I can actually go maybe through the Monday. What happens then? We'll do a custom range. Okay, so it's 3,000. All right, whatever. I thought it was almost 4,000. But anyways, look at what I wanted to show you is that the drawdowns, the P&Ls are like $400, $300. Look at the drawdowns. These are tiny ass drawdowns. Yes, it takes a long time. Yes, it's going to take us 3 weeks possibly to get funded. But this is the way forward. This is the way, as they say in Star Wars. I'm going to do my best, Pedro Pascal. This is the way. Why? Because this is the way for us when we get funded to actually keep the account. Because remember, I have a $6,500 drawdown. Look at my drawdown. There's like nothing over there, right? It's not like it can still certainly can get worse as we go forward. And yes, it's a big commission burn, everything else, but who cares? None of this matters because what really, really matters is control of the downside. And the control of the downside has been really, really good with this particular approach that I've been trading. So we're gonna talk about that today in our session. Oops, what happened to my session? Disconnected. Oh, it's the wrong chart. Hang on a second, guys. Hang on. Sorry, I got to get rid of all my crap here. I have too much stuff on my chart. These are the gold trades that I did this morning. Gold to me, really, really interesting trade right now. Obviously, it's an uptrend, but as you guys know, I'm as much of a fade trader as I am a trend trader. I was buying it over here when I had the 4 or 5 labels. Once we get into the 6, 7 labels, I was trying to sell the highs, especially at the 615 level. I'll sell you the whole store at 615 right now because I knew that was going to be a pretty easy comeback for us. Now, if we bust through the 615, 620 will be the next level. At which point, I'm happy to offer it out. So I sold the 14s, I bought them back at 13s. I sold the 12s, I bought them back. Just scalping around. Basically getting myself organized. The S&P, kind of missing. I was eyeing this whole decline trade right now because S&P was a little bit weak to the open. We dropped, then we came back up, and what I was hoping for was actually this particular trade. But I started talking, so I missed you guys. I missed the trade. Now we're going to be very, very patient. We'll see if we get a rally back up. I'm going to try and. Honestly, I don't even know if I'm going to short along this thing because we have a double bottom in the S&P here. It's not like we're really, really opening up a massive downside trend. But I think the near-term bias is probably to the downside. So if I start to see a purple, here's a purple label on 2, probably worth a shot. I'm probably going to short this thing. As a matter of fact, let's do that. We'll open up a trade once if the candle gives us a retrace trade. Look at the TLT. Why do I want to look at the TLT? I'm only looking at price action. Remember, I could care. Our approach is all about scalping. It's all about supply and demand. It's all about taking advantage of near-term fluctuations in the market. It's all about trading with trend up to a point and then trading with counter trend up. Once we get really, really overbought or oversold. It's all about making quick profits that really don't have any kind of duration of more than a minute. Say, look at this. I missed the trade. I really wanted to sell this out here. Fortunately, the purple just didn't materialize. We're probably going to go down here. So once we get down here into the 88s, 90s, that was a big support level on Friday. So I'm happy to make bid over here to start making bid over here. All right. Purple's still building. If it builds again, I'll probably offer it out. But it looks like we're starting to get a little weaker here. Honestly, we're not doing anything. The markets are really, really flat. Let me get rid of all the prior trades so it's not so. What happened to my thing? Where's my trading?
Maybe you want to tell them a little bit more about what purple and red means, Boris. Get a little bit more detail on that.
Yeah, I will. I just want to get rid of. Hang on a second. Sorry, guys. You know what it is? I think I know what it is because I just need to get into my settings, and I want to get into orders. No, executions. Sorry. It's just like when you multiply. Hang on a second. Join ask. All right, we're gonna sell the purple trade. So the purple trades are retrace trades, right? Remember, don't fade retrace. Let's kill it. And boom, 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 done. Eight ticks, $100 in less than 10 seconds. My favorite kind of trade. Remember, when we were at Trader Fest this weekend, many of you joined me, right? And you had many guys who were in the futures pits. I specifically brought you some really professional old-time traders: Jimmy Jude, Anthony Credelli, Tracy Schuchard. All of these guys have spent all their time in the pits, and and I spent my time market making in the 90s. And to make money scalping, you have to do the exact opposite of what makes normal sense. You have to do the exact opposite of what seems like the right trade on the chart. So the most important thing when you're scalping is at least from my approach, is I always want to be on the near-term opposite move. If I'm trading with trend, I'm going to be selling the short-term buy against the long-term sell. So I'm basically going to assume it's going to dip, right? And if I am going to be if the price action is above the long-term moving average, so I have the 8 period above the long-term moving average, so I have a long-term trend positive, I'm going to be buying the sells. I'm always selling the buys, buying the sells. I'm always trying to put myself into the absolute highest possible value position wherever I'm at. Now, if I get run over, I'm just going to get larger at bigger trends, because the trend here is still to the downside, and it's still going to resolve. If it doesn't resolve here, it'll resolve here, it'll resolve here. That's why we always trade small. There's two absolute inviolable conditions that make my trading so good. I trade tiny relative to my total size. So I'm trading one contract against a $250,000 account as my starting size, which allows me to go 2, 4, and if absolutely necessary, 8 contracts to go large, right? I am always selling highs, buying lows. Now, if I'm in trend, I may buy the dips in trend, and I may buy the rips in a downtrend. That's if I'm doing trading, or if I see overbought, oversold conditions, like for example with the gold trade over here, right? With the gold trade, I sold all this top. Why? Because we had massive moving average separation. The key to me is if I have wide differences between the 8 and the 200, and wide we define as 20 to 30 basis points of the underlying. So in this particular case, it would have to be at least 6 to 9 points of difference between this in order for me to even get interested in trying to fade the moves, right? And when we're close, then I want to be. When we're close and we're above the moving averages, then I want to be buying the dips. If we're close and we're below the moving averages, I want to be selling the rips. Right now, this flips over right now because we're basically in a very chop environment. This is a kind of a market I try to avoid completely. Right? I told you the thing that we hate is when it just simply goes up and down around the long-term moving average, like a flat noodle. That's killer, right? We can still make money in this kind of market, but it's just it makes us fight the market for a long time. We have to go 2, 3, sometimes 4 times into the market to resolve the trade. It's just a very unproductive trade. So we don't, I try not to do any of these trades until I get some. I want to see 2 types of moves in the market. I want to see a trend move first, so then I can try to take advantage of the trend, and then I want the trend move to get really crazy, so then I want to start fading the trend. But if I have like this limp, move up and down, like oscillation, this is the reason Kathy doesn't trade. Now Kathy will buy momentum, but she sees Monday trading is usually like very uneventful trading, and it's not productive for her. And she doesn't have the kind of quick scalp conditions that I do, where I can try to make my money within small holes. Like driving my Mini inside of New York City traffic, I can hide between big trucks and get around and move around. But if you're trading the 1 hour chart, you're not going to be able to squeak by on 8-9 ticks of trades. But it's just not productive. Like this is just garbage. I have zero freaking interest in looking at the S&P until maybe it pulls like 9-10. Not pulls to 9-10. We start to see a little bit of a trend move. Then I'll try to game it both on the trend side and then the counter trend side. S&P looks a little better because it's actually holding bid, I believe. Yeah, it's still S&P is still like there's nothing here. I don't even have the first green label on the S&P as far as trend goes, right? So for us, like to give an idea, S&P is 50, we're at 80. We need to see like probably 600, 620 in terms of like the price being at around 600, 620 in order for us to see some kind of conditional continuity move in the price. So one of the most important things is actually to do what Kathy does, which is you got nothing to do, don't do anything, right? Like there's just nothing to do right now. It's Monday, it's flat, we're twiddling our thumbs. Not really much going on here, right? So fine, I will let the only trade that's interesting right now is gold, right? Gold is there. Now gold came off the 14s. I'll show you my chart, my all my executions, right? Here's how I traded gold. First, gold was, started to move up, on trend. We had 1, 2, 3 green labels with momentum labels that showed us trend. I was happy to buy the dip. I bought the dip over here, sold it over here, right? Great trend trade. I'm happy. I probably could have bought it over here too. I was just busy. I wasn't looking. So there was 2 or 3 great trend trades. Then once we get really, really high, we get into the 5, 6 labels on the purple side. And more importantly, once we get beyond the 12 to 13 layer, 12 to 13 level into the 14, 15 level in gold, man, I'm happy to lay it out. I'll sell you the house all day long at the 13, 14s and take it back, 13, 14s. Now we've come back, we've retraced a little bit. Now we're really sort of in an indeterminate zone. It's still up above in the trend. If it goes higher, like into the 15, 16s, I'll be happy to sell it. If it starts dipping, I'm not really a buyer because this is already a very, very exhausted trend. We're like 8, 9 labels into the trend. So the only time I'm going to become a buyer is once we get to the 200 period SMA moving average. That's when we get into relatively decent support. That's first. There's 2 types of support here. We got the moving average support plus the round number support. We got the 2600. So it comes in 2600. I'll be buying it all day long. I'll buy 600. I'll buy 95. I'll buy 90. I know I'm going to resolve that trade because it's going to bounce off those levels. So you have to, when you're scalping, you have to be very mindful both of the relative position of the instrument, the absolute position of it, and the levels that are trading. That's how you kind of put everything together into a really, really cool condition of how things go. Let me put out the link to Apex, guys. Make sure, where are we going? Here we go. Make sure you sign up for Apex. Get those discounts going. They're really awesome. Really awesome. Very, very easy to trade. It's very easy for me to trade in this kind of approach because I'm using very small sizes and just doing multiple trades. I'll do 10, 20 trades. Just think about this. I'm doing $100 a trade. If I can do 20 a day, if I'm really, really focused, I'm zoning, that's 2,000 a day, right? With a $300, $400, $500 maximum drawdown risk. Where else are you going to get that kind of risk control except in scalping? Let's do a poll. Let's do a poll here, right? Let's do a poll here. Oh, by the way, here's the poll of what everybody's trading. 34 trading gold, 50 trading forex. You wussies on forex, and then only 16 trading indices. All right, all the hardcore degenerates trading indices with me. That's fine. I have a really, really cool piece of news for everybody. This is especially for the Europeans and those of you guys who are in Asia. Probably starting tomorrow. Pretty sure it's going to be starting tomorrow. We're going to trade CFDs during London. I traded Bitcoin this weekend with my new flash trader tool that we gave away for free. I'm going to give away this tool for free for anybody who wants to join me. So if you're trading CFD accounts, I'm not going to trade forex because forex is really just not my cup of tea. It's like the world's slowest trade. But this thing trades. I traded Bitcoin like a mofo over the weekend. It was so much fun. We're going to trade Bitcoin. We're going to trade gold. Probably going to trade maybe US 30 and NAS as well if we get a little bit of price action. So it's going to be 4 to 5:30 in the morning, New York. I'm going to try to do it Tuesday, Wednesday, Thursday. This is in addition to us trading equities during time because I really want to. I think there's a whole bunch of you guys who are trading CFDs and you just simply can't appreciate how cool Flash Trader is for making bank and making scalps. One of the things that is so positive about scalping for both CFDs and for prop accounts, but so negative if you actually do it in like a real account is this. So scalping is an amazingly cool strategy for low risk control and very steady gains, right? However, its one big drawdown is it's extraordinarily expensive. Like for every $1,000 you make, you have to spend $1,000 in commissions effectively. Just a rough. It may be less, but I'm just giving you the worst case scenario. It's expensive to do this because you're doing lots and lots and lots of turns. It's expensive to do commissions, which is why it's such a great strategy when you're doing prop or you're doing CFDs. Because if you're doing prop, who cares? It's virtual trading, and the commissions are built in. So you're not bleeding out of your own commission dollars. You're bleeding virtual dollars, and as you can see, you make them all back. With CFDs, what's really cool about it is that if you're trading CFDs on spread, and I really recommend you trade them on spread rather than commission based, because for this kind of strategy, you're going to hate yourself if you're paying commissions. It's all net in. It's net in. I mean, I was trading Bitcoin $100 target, $100 stops with a $20 spread. Like that means I got to make $1.20, lose 80 to just to have the odds, really really bad odds against me. It doesn't matter. I killed it with Flash Trader. That's the beauty of having commissions built in. You can scalp to your heart's content because you can really focus on levels. You can focus multiple times. You can resolve all 2, 3, 4, 5 time trades. Super cool. So very excited to kind of bring that new product to everybody because I really want to trade with CFDs. I'm actually curious. Let's gonna end this poll. Let's see how many of you guys trade. Do you trade CFDs? Oops, shit. CFDs. Give me a poll. I'm really hoping at least 50% of you do. All right, we're at 14 on gold, right? I'm pretty much at these kind of double top levels. Let's start the short process. I'm going to lay it out at 14.3. All right, I'm short the threes, and when I'm doing the first one, I don't have to get crazy. I can get I can try and take $1, maybe even 0.9 ticks off this thing. Let it come back. Let's see if I can come back because. What am I doing here? The price is extended over the 8, extended over 200. We're kind of levitating high up there. Can it go higher? Absolutely. Will I sell you the store up there? Fuck yes. But I don't need to be a hero here. I'm not diving on a grenade. I just want to take the trade and get my money. So let's see if we look at it. And did it go through? Come on, baby. It went through. Come on. There we go. Sorry. I nearly let out a very, very bad word, but it did go through. So again, you see how I laid it out at 13, took it back at 14. Super easy. Another $100. Just building now 254, 400. Build it up to 255 today. Build it up to 256 tomorrow. Build it up to 57 the next day. That's the game. Yes, this is obviously the CFD. This is why it's a London product. It's for Europeans and everybody who's in Asia and everywhere else. South Africa, where anybody but America. Canadians can trade. Yes, the Americans can't trade with me, but everybody else can trade with me. Okay, so this will be a lot of fun. I know. You know what? Board Panda is telling me. Hang on, board Panda is telling me this is fun. Where the fuck am I? Hold on, guys. Sorry, I'm trying to produce this thing. So board Panda is telling me that cap positioning is totally extreme, and all the guys I had on the show were actually on the opposite side of her trade. I know, but you know what? I let her do her thing. I don't want to get into her head. Kathy does not scalp. Kathy does not scalp. I'm the scalper. Okay. And if you want to scalp, you're gonna scalp to your heart's content with me. Who wants to scalp? Who wants to try Bitcoin with me tomorrow? Scalping Bitcoin. You guys want to do that? Let me see. I see about 52% of you guys trading CFDs. Come on, let's go vote. Let's Let's put some numbers in there. And those of you guys who are watching me on Twitter, get your ass into our YouTube channel right now, because vote, get links, and get your ass tomorrow, because I'm going to be giving away the trading tool for MetaTrader 5 and MetaTrader 4. So if you're a CFD trader, you cannot live without this tool. It's going to be the most amazing trading tool you've ever seen. But who's going to want to scalp Bitcoin for me for $100 a scalp against a $5,000 or $3,000 movement a day? How much fun is that going to be? I'm telling you, it's going to be so awesome. Okay, so gold still levitating. Could I sell this again and over again and over again? Yes, but I'm going to give it a little breathing room, because I think it may break the 15. It's 7, 8, 9. It's pretty mature trend, but it could be consolidating. I'll give it a little respect here. S&P, meantime, finally starting to break out. Okay, S&P finally starting to show us at least a little bit of a trend here, right? So now I actually want to be buying the dips. Now the purple comes in. I want to be a buyer of purple. So the first dip trade, I sort of missed the S&P purple move here because I was trading the gold. And that's the other thing I was going to tell you guys. You're not going to hit every scalp trade that there is out there, because the key to scalping is twofold: small size, multiple entries, know your levels, know your entries, and relative positioning. So there's I guess 4 or 5 things. But more importantly, focus. Like generally, if I'm scalping, I'm really only scalping 1 or 2 products. Like tomorrow when I'm going to be trading with you, it's really going to be just probably Bit and gold that we're going to be looking at, because you cannot physically pay attention to 4 different trades if you're doing 1-minute scalps. You're defeating the purpose. The key here is to focus on one product, make sure you hunt it properly, kill it right away, go on to the next one. Otherwise, it's going to kill you. So you need to be focused. You need to be in the game when you're playing it. But when you do, it's awesome. It's just you see picking up nickels left and right, and those nickels add up to some nice trades. Hang tight a second here, guys. Let me see. Oh, okay. No, never mind. Okay, cool. All right, yeah. So I'm watching S&P here. Still a little bit slow. How's Nas? Nas doing? Nas also, showing us. You see how we're starting to pull away. You see how this is starting to create a little bit of a trend. So when this creates a little bit of trend, yeah, then I want to be a buyer on a dip here. Do I ever zoom in and scalp any forex and similar? No. Forex is not a scalpable trade. I'd rather kill myself than trade forex. It is so fucking slow. Look at what I can do with indices, gold, and Bitcoin. I can make 10 trades an hour. Go ahead, try to make 10 trades an hour in the euro dollar. It moves 10 pips in an hour, right? These things move 10 pips in a second. I swear to God, if every time I look at FX these days, I literally want to kill myself. So no, we don't scalp forex. But everybody loves. If you want to trade forex with Kathy, she's awesome at that. And she does a really, really good job. But you got to know, you got to know what you're good at. You got to know what you like. All right, here's Nas. Nas coming in a little bit. Do we get the purple trade here? We also may get. Oh, the S&P is probably giving me a purple, right? Oh, S&P is a purple. Let's go see if we can start open up our position on S&P. Okay, I'm a buyer at 905, 905.50. Bought the trade. You guys see this pretty well, right? It's like a little bit of a bigger size. You can actually see the sizing a little bit. I'm going to get rid of all the executions because you don't need to see the past executions. We'll focus on this trade. So we're long 50s. We're looking to sell 750 as the target. 350 is going to be the stop. This thing, pops all the way down. We'll come back and in bigger size here, all the way to the support level. But let's see if the trading gods are good for us, and we can get out here at 907.50. Maybe 907. Let's see if they'll lift me at sevens. Drop myself down. Come on, baby. Come on, lift me out. Nope, not getting it. Just I know I keep saying this, but it's really it's like so important that I just kind of do this. I need to be able to do whatever. Thank God it did it. It's really hard for me to talk and chew gum at the same time. So like if I'm in a trade, I just got to really just be focusing on trade and then explain to you what I'm doing later. But anyways, you got the idea. So my way doesn't have to be your way. You can be a buyer of greens, and you can buy, and I'll show you the great thing about the tool is that it's really designed to be a really good tool for buying momentums tomorrow. I am just naturally a retrace trader. The chase or retrace. I am team retrace. Oh, let's do this. Let's do this to see if we'll see. This should be a lot of fun. Let's do a poll. Are you team chase or are you team retrace? That should be fun. Let's do this poll. Team chase or team retrace? Let's see if you guys know what I mean. I think we need to, Catherine, we need to make some new shirts. Gonna say team retrace. Let me know. So why did I trade this trade? I'm buying the dip. I'm buying a value level in an uptrend, right? So if I'm wrong, okay, great. It pops down. I'm going to buy even cheaper. If I'm wrong, I'm going to buy even cheaper. Conversely, if I'm buying the breakout level, if it breaks out, great. But if it doesn't break out, then I bought it very expensively and I've lost like a level of trading that I have to recover, right? It's like I'm stretching myself out at the most expensive price. Instead of the cheapest price. Here comes in level 3 to the bottom. I'm talking, so I'm a little bit late on this. Probably worth a buy. I'm just not going to pull the trigger because I'm not loving this dip. It's a pretty deep dip, but it's probably worth a buy. If this doesn't work, it doesn't matter. It will dip to 902s. I'll buy it at 902s. What the most important thing that I'm operating on right now is that the near-term trend has been established. The markets are telling you that we want to be buyers for the next, last 20 minutes. We've been buyers. We're buyers. So I want to be buying on any kind of selling because that's what the market is telling me. And that's as simple as it gets, and that's as effective as it gets. I don't have to know anything else. I don't have to look at TLTs or cross markets or any other bullshit because the near-term support, the near-term supply and demand is visible on the chart if you know how to read it. And that's why the BFF scalper is such a great scalper. Oh, look at you chasers. Look at you all team chasers. By the way, I'm going to put in a link here for scalper and everything else that you guys want. I'm putting in a link for Apex, and I'm putting in a link for our friends at Think. A lot of cool stuff going on over here. I think the discount is actually like 30% on Think. 70% on Apex. So go out there, go do it. Let me see what else is going on here. Let me see where, let me go into my control panel, see if you guys have any questions. Yes, to PDC Scalping tomorrow. Yes, Gordon. We're ready to rock and roll, my friend. Absolutely. Absolutely. All right. I'm going to hide. Where's my comments? Hide. Banners. Okay. Cool. Cool. Do I play with fibs or just naturally look 50 something? I don't play with fibs. I don't play with it. I'm a huge believer in pure price action. I come from like a very, very long. I'm so old that I worked for Drexel Burnham and Chernow, which is Drexel Burnham Lambert, which most of you don't even know was one of the biggest, baddest companies in the world before it went bankrupt. So I sort of, got my start in the old days when people used to make markets, and I got a feel for how price acts on a short-term basis. And you have to understand that on the short-term basis, it's really the Costanza trade. Whatever you think looks really, really good is most likely a lie. And they want you to, they want you to buy. Like they want, maybe this 6 is going to, by the way, look at me. I fucked up the entry here. I should have bought this entry here on the 3s, but whatever. The point being is, they want you to really plow in here, and then, they'll rip your heart out on the next trade. Now, if big money comes in and there's a lot of demand, this thing is going to rip higher, and that's fine. But on a short-term basis, market makers are always on the opposite side of where retail is. So their whole job is to sucker you into buying the highs, selling the lows. Your job is to actually not to fall for their 3-card Monte tricks on the short-term basis. So I trade like an old-fashioned market maker. Like a lot of the guys in the Trader Fest. We're going to have all the videos of Trader Fest cut. It's going to be really, really interesting. I think it's fascinating for you guys to see. The advantage of this kind of trading these days for a retail trader is amazing, simply because prop firms eliminated commissions and CFD firms eliminated commissions through spreads. So if you can do this consistently without having to incur the tax of commissions, you're doing great, because you're going to go net positive, right? If you know how to control the risk, and you're just going to build your equity in a very, very methodical manner. That's what I try to teach. I'm trying to basically, the target here is for us to do 1,000, 1,500, 2,000 a day in one account. And then as all these accounts get funded, remember, the drawdowns, we have like $6,500 drawdown in Apex, and I'm doing a $500 drawdown. Imagine if I do the exact same thing in a trade copier. In other words, I'm trading very, very small across 5 accounts now instead of just one account. That's how I create leverage without ever increasing my risk. That's the game plan for us as we go forward into 2020, 25. That's how we make huge money without having to really incur any kind of risk. So hopefully you guys are going to come along for that ride. But we're going to do the same thing on for those guys that want to trade their own accounts. I'm going to show you exactly how you can do this on your own accounts as well, with microscopic risk and continuous forward P&L. So it'll be a lot of fun. I'll post all the schedules this week. And I'll definitely post, come join me. I'm sure I'm going to trade tomorrow at 4:00 in the morning. So come join me, and I'll show you how we're going to do this with Bitcoin, NASDAQ, and gold. It'll be a lot of fun. All right. We whipped out on this particular trade, which was a good entry trade over here. Would have been a good trade. Where's our gold? Gold is through the 15s. See, I told you, gold, we needed to wait a little bit. Gold is through the 15s. Okay. So do we want to be heroes here? Probably, you know what I want to do with gold here? I want to be, let me see if I can, you know what? 15.7 is the high. I'm gonna lay it out at the high of the day. I got lifted on the 7s. If it goes to the 17s, no problem. I'm happy to sell in the store over there. In the meantime, I'll try to take it back here at the 15 level here on the retrace. If this high doesn't blow much higher, it's going to retrace. If it does, I'm happy to get bigger. So here's gold. It's this isn't a great trade because it's clear that the gold really kind of wanted to break to the upside. But at the 16 level, it's already a very, very elevated level. A lot of retail money just comes in naturally trying to bump it up. All the dealers are happy to sell it to them at that level, take it and try to take it back. Because remember, dealers' whole job is to sell it to you, buy it back from you cheap. Do that 1,000 times a day. That's how they make. That's how you make money without risking money. This is what you do. You sell them, you buy them. You sell them, you buy them. You sell them, you buy them, and you do it in a small size. I'm now above 500. 254, 500. I started 254 for the day. So nice, right? Now I'm not touching this thing until it probably goes to 17. If this thing drops, deeper, maybe I'll be buying the dip. We'll have to see. But you know, gold is a nice steady trade. It's been a positive trade since 8 o'clock. It's already been like a 3-hour trend. There were great opportunities. Those of you who are trend trade traders, they're just great opportunities just to buy the purples, right? I could have bought a lot of the purples here. I just simply once it got a little bit higher, I started trying to sell the highs because that's my natural inclination. But if your natural inclination is to buy the lows, you could easily have been a dip buyer here, dip trend buyer here at every single level and made bank. It was pretty clear that gold was the one true trend today in the market. Now, by the way, S&P is a trend in the market, and now we're really starting to take off hard. I'm not playing the let me pick the top game right now with the S&P because it's a pretty early trend. It's only 3 labels, to the trend, so we easily could extend here maybe to the 20s, to the 30s. It's interesting that look at the NAS. NAS is really NAS would have been a great buy the dip trade. Again, just you can only do one thing at a time, right? You can only pick one trade at a time. But there's lots and lots of different trades that you can be looking at here as potentials. You took that scalp as well. Good job. Pat. Okay, I have to put this comment up just because it's it's really it's just purely my vanity, right? This is what Pat says. All right, thank you, Pat. You get a big comment for that. Thank you for that. S&P is a chase trade. You're right. S&P is a chase trade. You bought the 4s, the pure breakout, but S&P could also be the retrace trade. If you bought the 3s, if you bought the 2s on the S&P, you were just you're in the money, right? Remember, I was dicking around. I was like, oh, I really want to buy the the 3s, the 2s over here. And I didn't, because I'm a pussy. I didn't pull the trigger, but I should have. Now we're really high up, right? Sorry, I'm showing you NASDAQ. This is the S&P. I was like, I want to be buying here. I want to be buying here. Absolutely, that would have worked. NASDAQ is just really ripping. And NASDAQ, by the way, here's the interesting thing. Like, if you want to get in front of this train of NASDAQ, you absolutely want to wait till the 700 level. Like, you don't even want to start this fight until you get into the 700s. Even then, it's probably going to maybe take you two or three trades, because this thing can just verticalize like a mofo, and you don't want to be on the opposite side of this, trying to fight a 100-point move. But it is hugely overbought in near term. Look at the separation. We are 55. We're 100 points up, right? Remember, I said like basically 30. It's 30 basis. 10 basis points is around 30 points. 30 basis points around 90 points. If I get 90 points of separation between the moving averages, it's not quite that yet. 648 against 556. Well, yeah, it's about that. That's a very key tell that we are short-term overbought, and they're going to compress a little bit. They're going to come in a little bit just because everybody needs to take some profits and get a little bit of breathing space. But having traded NASDAQ forever, I really, they love to run the round numbers. They're gonna take it up there, stop everybody out at that level, and then hopefully try to take it back. So we got to just be very, very patient with this thing. S&P is it's a little bit of an easier trade at the 15. It's not as much of a overbought condition, but there's no reason to be a hero here. I'm happy to hang. Gold is sort of topping out at the 15 level for the time being. We're gonna leave it. Remember, look at gold. It's already 7, 8, 9, 10 moves through the trend. It's getting tired. Doesn't mean that it can't get further moved. Remember, on Friday, NASDAQ took 27 turns before it finally turned itself to the upside. So you can definitely get, overbought conditions can get more overbought. That's why you got to be very careful of everything. Right now, I'm just eyeing the NAS for the 700 as a potential short for me. We'll see. We'll see if anything happens here. S&P probably 1920 same kind of idea. At that point, it's really, it's really going to become pretty expensive on the near term. We're at 84s on NASDAQ. So, you know they want to run the 700s. They want to run the 700s. $91. All right. I'm going to lay it out at 95. Let's see if they sweep me over there a little bit early, just to see if there'll be a little bit of a pullback at that level, but we'll see. Or maybe remember the way I trade is I don't know if the trade is going to be good or bad. I just know that probabilistically it's not a bad place to start. And I start my whole probabilistic cycle because I'm confident in my trade cycle. I'm not confident in any of my levels that I do, right? I have no idea if this level is good or bad. I just know that this general area is not, is probably a pretty decent area to begin, to begin the fade process. But maybe it just dies in front of this and we're screwed. We'll have to see. But we see lots of enthusiasm. It's 10:30. They love to rip it up. Usually, if they're going to rip it into the 10:30, 10:45 level, 11 they're going to try to sort of smooth it out a little bit, as far as consolidation goes. All right, let's see if they lift me up here. No, 94 is the high of the day. 94 is the high of the day. They're reaching out. They just missed me. All right. It took me. All right. I took like, $100 out of this. I probably could have taken more, but easily could have taken the full 10. If you guys traded, then I'm sure some of you took. How many of you guys took the full 10 on that? What do you need to see you jump to chasing instead of retracing? I don't ever chase. As I said, even if I'm going to trend, I'm going to buy the dip on an uptrend. I'm going to sell the rip on a downtrend. I have tools that will help you do chasing, that put you sort of in the best possible chase condition you can, and I'm going to show you that tomorrow with trading Bitcoin and trading gold. But when it comes to futures, I just am genetically incapable of chasing this stuff. I mean, I used to do it, and I hated it because it destabilized me. And then again, you got to know who you are. If you're a chase trader, then don't do what I do. Just use my indicator to kind of take the trades where they're at. Buy the 3s, buy the 4s, go for it. If you're a retrace trader, then of course get comfortable. It's very important to do what's comfortable to your personality, not what somebody else is showing you how to do. I'm just here to give you the analytical tools to explain to you. Yes, we're in a fucking uptrend over here. Yes, the trade was definitely buy the dips. Yes, we got totally overbought over here. So if you're thinking of buying over here, you probably don't want to be doing it, right? You may want to pause. And by the way, this is not a good dip trade. I don't love these dip trades. The reason why I don't love like this kind of a dip trade, even though it may work, is because we're so far. The separation of moving averages is so far. The dip trade that I love. Buy the dips is when the moving averages are relatively close to each other, because the possibility of expansion is what we're looking for. Once you have the reality of separation, then you're just basically hoping there'll be more separation. And that's a very, very big, big gap you need to fill. Like my jaws are already open. I'm not going to be able to open them much further, right? Whereas if I just have my mouth slightly open, I can definitely open it wider. Whatever, or if I'm a alligator, I can definitely do that. Traded fast, not yet. Not traded, not yet. It was curious if you ever swap strats. Oh, swap strategies. Oh, you mean like if I go from chase to retrace? No, I'm straight up telling you that I'm a retrace trader. But you can use my stuff. You can use my stuff as a chase trader. Oh, thank you. Look at that, Susan. Thank you so much. It really was great. It was amazing. Like over 3,000 people. It was really, really cool. So much, it went so fast. I didn't even like I literally just didn't even know like the 4 hours went by. It was so much faster, But I see you guys. I see the majority of you guys are chase traders. I see you, So I will call out the chase trades. I will tell you where I think the good chase trades are, even though I may not personally do them. And by the way, if you guys come join me tomorrow morning, which is Tuesday morning London, for the CFD trading, the tool that I have for you absolutely, in fact, is designed to help you run chase trades in a very methodical fashion. So maybe we'll run a couple of chase trades with my tool, just because if it's a tool, it'll help me do it. But yeah, it's just a lot of fun. Just a lot of fun. All right, guys. I'm just looking to see if there's any more stuff to be done. Gold kind of died. We had our fun with gold. Gold definitely looks like it's going to correct a little bit, maybe to the 10s, maybe to the 11s. NAS died right in front of the 700s. That means it's probably going to go back up, right? Like, okay, is this now? Okay, you see this five trade over here? Gun to my head, okay, if this trade stays green, maybe it's not a bad chase trade. Like I wouldn't kill myself to do this, but given this just tells me maybe they had a little bit of a wave, very shallow correction. Maybe now they're ready to go take the 700 out. So if you're a chase trader, this might be worth a punt. 3, 4, 5. Let's see if I'm right on this. 2. All right, in at 85. Target would be like 95. Let's see if they want to run it. Let's see if they, if they want to catch, if the buyers really want to come in. But it's still consolidating right in front of that 700 level, right? So the thing about the chase trade here is, and again, same principle applies. If you're going to chase or retrace, you got to trade small. Because if you're wrong, you got to be willing to take the stop. You got to be willing to reconfigure yourself and take the next green candle, next green label candle as your next trade. To get in there and push through the upper ceiling. This is still, we're still putzing around here, right in front of that 700 level. So no, and I guess looks like we're not getting stopped out. Probably looks like we're 1 point away from. If we took this chase trade, just barely survived it just yet. Just barely survived the chase trade. But this is one of the reasons why I don't like taking the chase trades, because if I'm wrong by a millimeter, I'm generally going to be taken out of the trade. So far, still surviving this trade. Still surviving this trade. 95 would be the target in this trade. 75 is the stop. Virtually, I'm trading this totally virtually. We need everyday live stream. I'm doing Monday through Thursday live streams, guys, and then I'm going to be doing Tuesday through Thursday CFD live streams. So it's like a lot. That's going to be seven live streams here. Hopefully, you guys will like that. So if you're in this chase trade and this thing dumps, right, then you got to just sit on your hands and wait until we get a new green candle forming. So far, they're keeping you alive by the skin of your teeth here in this trade, but you're not getting the momentum move that we were all hoping for. Because it's obvious. It's a lot of overhang. It's a lot of supply at this level. Once the supply goes, they're going to rip it. They're going to rip these people's throats off. But until the supply goes, you just have to Grin and bear it. Hang tight. So, I'm just watching this carefully to see if the chase trade breaks out. Again, now I'm not trading the trade because it's not my trade, but maybe they're gonna build a little momentum here. Looks like we're gonna die. And if we do die, and you're a chase trader, then you have to be patient, and you got to wait to see if maybe they regroup at a lower level, and to take you out, take you higher. Looks like we did die out. Sorry, if I'm trading this accurately, I probably got stopped on this trade because this probably went down to 75. Yeah, it did. We took out the 75s, and now I have to go back in. This is one of the reasons why chase trading can be so tough on a scalping basis. So now you have to commit again, second time, because this is a green candle. This candle, stops, closes here. You got to commit again because otherwise you're never going to be able to resolve this trade properly. 3, 2, 1, in at 85 again. Okay, let's see if we're going to run it again. Yeah. And we're still consolidating. And that's, the thing about, if you think about what is a chase trade, it's a breakout trade. And the markets will very often torture you with 2, 3, 4 false breakouts before the breakout happens, right? Especially after a big up move like this. Now, do I think we go higher? I'm pretty confident we're going to go higher. I'm really pretty confident. Things can always go differently, but I'm pretty confident that this is just a pause that refreshes. But the pause that refreshes can torture you 2, 3 times. So you really need to be prepared both mentally, financially for the torture in order to be able to hang in there and resolve this trade to the upside. Somebody's second win on the ES. Oh, good job. You guys are trading. So, I'm kind of getting tortured in the S&P, but the look at this. ES is in the 20s. ES is in the 20s. So the ES really did trade. The momentum trade in the ES was really good. Yeah, irony of ironies. It's the S&P that is the momentum trade, whereas the NASDAQ kind of died out, right? It's really funny. By the way, so where am I here? This is level 4. We're in the 20s. I'm actually we get into like 22s. I'm going to short this thing. I'm going to be happy to, because I think 22, 25 is an area I'm totally going to resolve. So again, I'm going to be on the opposite side because I'm going to be fading. Why? Lots of moving average separation here. We are 918 against 901, 18 points. 18 points, the 6 points is 10 basis points on S&P. So 18 is 3 times. 3 times is where I start to get interested in selling tops. I may be a little bit late here because I think I don't know if I'm going to get the 20s. Hang on a second, guys. I'm talking, but I'm really not doing anything. Okay, let's see if I can lay out the 2050s. I don't think I'm going to get this thing because I'm late because I'm just dicking around with that virtual NASDAQ trade, whereas I should have been doing a real S&P trade. Let's see if this is going to lift me out. Come on. All right, I'm at not 20. Fuck. There was 100 up on 2050. All right, we'll see that. All right, they're lifting me. Let's see what they want to do here. Maybe I'll take 1950 for a quick comeback here. Otherwise, they're probably going to rip it higher, and then I'm going to have to get larger. But it's fine. We're going on 2 hours here. Everybody in Twitter, come on over and come hang out with us with NASDAQ so you can get all the links. So Pat is saying, his exit is my entry, which is very much exactly how it should be. That's, one of the best counter trend traders, Jason Shapiro, who's a market was on my show, and he often talks about the fact that his entry is trend traders exit. That's exactly it. You're doing a handover on where you are. If you're good on both sides of the market, that's where you should be. All right, I'm still putzing around at these levels. Wow, it really slowed down here. I think we're going to rip higher. I think I think I'm going to have to work this trade maybe a couple of levels, because I think we're going to rip higher on this trade. But I have to go because Kay needs me in a meeting soon. But I don't want to leave you in a lurch. All right, you know what? I'm just gonna take another $50 off the trade because I wanted to clean up the day. We are at 700 for the day, live trading with you guys. The one thing I promise you bitches is that I always do lots of trades, right? We do lots and lots of trades, and they've been pretty good. So hopefully you guys really enjoyed it. Thank you so much, guys. Really a lot of fun. I hope you guys really enjoyed it. Come tomorrow with me. I'm gonna post up the time 4 to 5:30, trading CFDs, trading Bitcoin. Really fun. Everybody else, I'll see you guys tomorrow. Regular time, regular bat station. Everybody take care.